Hi traders, good morning. Welcome to this video on the euro dollar and pound dollar for the second part of this week. Before taking a look at the markets though, wanted to let you know about this special offer here with Elite Currency ECS Live. That's the entire year 2020. The signals, the setups, the analysis, webinars, all of that through our Telegram channel. 30% off if you order in the next 2.5 days basically. So I hope to see you as a member very soon and hope that you can join us in our channel. All right, let's now take a look at the euro dollar. All right, this is the 1 hour chart, and with the break below this low, it was not a 1, 2, 3, 4, 5 pattern, and instead now looking more like an ABC pattern. So from that point of view, I think the bears are in control at this moment. We see a strong downside, an ABC down, followed by what looks like a 1, 2, 3, 4, 5 maybe at the moment. So I'm leaning towards downside as long as price stays at the very minimum below this low, right, 111.80. If that is a wave 1, then the wave 4 should not go into that price territory. If price does go above that, well, that changes things again, and it's really starting to become quite choppy, in fact, and we're starting to get multiple lower highs and higher lows. In that case, we had here, here, and here forming kind of a triangle pattern at that moment. And the triangle could break in both directions, in fact, because we have momentum to the upside and momentum to the downside. So it could be A, B, C, D, E for up, or A, B, C, D, E, and then down. Let's see. In any case, break below above 111.80 should not see so much upside, because if this is a triangle, then 112.05 should be the spot where price doesn't break above. If it breaks above that, then things might be looking differently again. In that case, I'm leaning towards a bigger upside, and I think that this could just be kind of maybe some kind of correction, a wave 4 correction for upside perhaps, once it breaks above that. For the moment, I'm bearish though. I think that the fractals are certainly bearish, and the moving averages are starting to become that too. We see price still showing the most momentum to the downside at this point, retesting the 20-week EMA. So I think that this is more of a bounce spot. I would think that price usually should not break above 111.68 if this is indeed a 1, 2, 3, 4, 5 pattern. So this retracement should stay kind of below 111.68 then. Maybe go up to 111.60, I don't know. Maybe retest the top of the 20-week EMA, but not much above that. Bounce and continue lower. I would look for a break below this trend line and below this trend line. And for the moment, I think that that could indicate the bearish breakout. The 4 hour chart was certainly looking bullish, but the retracement now is quite deep. It's the second break below the 20-week EMA. This was the first. Second ones are always typically better. So I'm leaning towards, therefore, also the reversal trade in this case. Okay, and here we had a kind of a failure to follow through to the upside. So ultimately looking more like this kind of pattern, a bigger ABC down. For the moment, that could take price, for instance, down to 110 support zone and the round level. Okay, at this moment, either price has completed an ABC and we're getting an ABC down, or this is a wave A, and wave A like this. This is an ABC down, and we get 5 waves down. Doesn't really matter. In both cases, price should go about to about 110, 109.50. And in both cases, this would be a bouncing spot because of the higher time frames that I'm looking at. Like monthly, for instance, HMA is up. 2 out of 3 candles are bullish, closes near the high. That could indicate the end of this bearish swing and the start of a bullish swing up to the 38 fib at 115, in my view. So let's see. Another break, of course, important break is 111. That was last week's low, so if it breaks above that, this is starting to become more likely that there is a bearish push. Okay, so back to the hourly chart. I'm not certain that price will make this break, but if it does, good chance of it falling to 111, and if it breaks 111, down to 110.50, 110, maybe 109.50. If it breaks above 111.68 or 111.80, then I think we're getting into a triangle pattern, breaking for 112. I would say it's bullish and aiming for 112.50, 112.75 for the moment, although it could extend to 113.50. All right. Pound dollar is also in a triangle pattern in my view. This is looking like wave A. This looks like a B. I think we're in a C at the moment. And wait, that's a 1 hour chart. Sorry. I was confused. Excuse me. This is an A, B, and now we're in a C. All right. Within the C, it looks like this could be a potential ABC here, for the moment at least. Let's see. The moving averages are still bullishly aligned. So, and price did not break below the 20-EMA. So, you know, if the pound starts to move up a lot, it will drag the euro dollar too, of course. It's a little bit tricky spot, and it's kind of making higher lows and lower highs as well. So, from this perspective, it's a little bit difficult because you got a break, pullback, continuation, another pullback, right? So, is this still going to continue, or is it going to reverse, basically? I'm leaning towards an ABC like this because of the price patterns. I mean, because of the wave patterns, but the moving averages are bullishly aligned. Only the HMA is down at this moment. Price is in the 21 EMA, so it's a little bit tough spot. Certainly, of course, I got to keep an eye on that trend line, and we'll keep an eye on this trend line, and let's see which direction it breaks. If it does break to the upside, it could go up to 132.50, maybe even up to 134 if there's a bigger kind of ABC zigzag like that. 132.50 for the moment, because I would expect an ABC like that, and the bears could still take control about 132.50, doing something like this kind of pattern here for that wave C like this being A, B, then a C, and up for D again, and then down for E probably, for instance, if it is a bullish triangle at least. So 132.50 for the moment, still very strong level. Let me put the line there because of this kind of pattern that could take place like that, this kind of fib pattern for wave C, okay? Now, if it does break below 131, that could indicate the breakout towards 130. 130, I think, would be the bouncing spot for upside, because if we put a fib from here to here, that's where the 78.6 fib is. So that's important. So if it does make the break below 131, main target is 130, all right? And that could be a very strong bouncing spot. If it does break to the upside, then there's not a lot of space, all right, because the 78.6 fib and the 88 are around 132.50. So if it breaks above the 21 EMA, there's a trend line and these fibs. So it's a little bit troublesome, but it could move up higher above 131.40 towards eventually towards 132.50 zone. Okay. So, and that could be then a bouncing spot for downside within this triangle. That's about it. Once again, would be very happy if you join us as a member, of course, where we have our own setups and our own analysis and webinars, videos, everything is added there. For 2020, you get a 30% discount for the entire year. So that's a unique opportunity because it only lasts 2 days and 15 hours remaining. So hope to see you then and there. In any case, wish you all good trading and see you in the next video. Cheers. Bye-bye.